Good morning everyone, hope you're doing okay. May the 16th, 2022 Bulletin. Just been through this Bulletin and it's quite mixed, which I guess would be understandable from last week. We were really quite risk off last week, so we're going to see maybe a bit of fluctuation. We had some rubbish China data out overnight which didn't really help, and we look at the futures and they are quite negative across the board, apart from Switzerland and the UK. But you know, got quite a lot of red there. So the Bulletin is a little bit mixed, I'll admit, but it's probably a hangover from last week because we were on the verge of like a crash. So we have to be very careful this week, obviously. So there's a 24-hour difference. You know, if that increases, it's going to impact the big picture. So we'll have to see what happens tomorrow. The big picture is that we're risk off because they're net long. The live VIX is below 30. AJ made a sell, so that's a risk off sign, and the yen is strengthening on the bubble. You can see the size, and Aussie is weak as well, so there's AJ short there. So if you woke up really early, you could have caught that move. Yen is strengthening on the small time frames, which we can see, and it matches the daily, where it's quite strong on the daily. In fact, it's the second strongest now. And if you saw Marco's analysis, he gave you the heads up 3 weeks ago about the yen and how it was going to strengthen, technically. S&P made a buy here, and the trouble is with the S&P right now is that we're at the 4,000 level, and that's going to encourage lots of retail bears and bulls. They're going to get involved at that figure, and they're possibly going to go long using 4,000 as a psychological level. So that's the reason for this maybe to go sideways today. Currently we are pretty much unchanged since I took this screenshot, but if they hold on and we don't cross the 21 moving average, it's going to fall, and then they'll go long, and then it will come down, and we'll probably come down to test these lows. So pretty horrendous if you're trading this one currently, because I think maybe we still need a flush out. But we'll know by looking at the sentiment, and it looks like we are falling in price, and yet they're trying to buy the dip. I'm just looking at my other screen. This is the real time. This is what I'm looking at right now when I'm making this video. So do get a copy of this so you can see what's going on, and then you know you can be ahead of everyone else, the retail guys. So yeah, this might fall. So be careful, and that would kind of agree with what we're seeing with the yen bubble. Okay, so gold is a little bit cleaner, where we made a sell at 1850, and we fell because it wants stops. And so this is a great argument for sentiment analysis, where you can see what the reason for something to move is because the retail guys, they've gone one particular way, so they get punished, and we see it every single day on multiple instruments. So this is a great example. You don't really need that many technical indicators on it. You might just need a SSI chart, and enter over stop up here, maybe a $10 stop, and it fell to 1800, so you would have got a 5R on that trade. So that's that. So fairly straightforward. This is not too bad. We're not seeing any inversion, and we've come down quite a lot on the 30-year yield. We were really high last week at 3.2. So that could be a positive sign for risk. FXCM client sentiment is saying buy the dip, so that's a bit of a mixed picture. However, I think what's happened here is that the reason for the shifting is that they got stopped out, and they might have reversed. They've gone short on the France index and the German index. So I think they got stopped out on those particular trades. So there's the big shift. So yeah, that's. Also be careful, the US 500 and the US 30, they haven't really shifted, but the European bourses have. US haven't so much. Yes, it's a very minor shift from last week, so be careful. So it's a little bit mixed right now. CAC40 is the greatest indication for US 500 direction, a 98% probability of correlation, and you see how everything is in line and nothing's out of bonk, which is good. The Swiss yen was out of bonk, and then the dollar yen was out of bonk. The reason for the Swiss yen is because we breached parity on the dollar Swiss, so there had to be a repositioning of big money and that's why that was slightly out of sync with its peers. I think because the dollar Swiss, we breached the parity level, and it probably took people by surprise. There's a little bit of repositioning on Swiss franc pairs and their crosses. Note where the yen is, and then note where the Aussie is. So there's AJ short. So there's if we measure the distance from the daily pivot, this could be a pound Kiwi buy signal, but we'd need risk off, because this is a risk off signal, because the Kiwi is riskier than the pound, because that's that logic. So if you were to take this, you'd want to ensure that we remain negative. Okay, so that's the logic there. So sentimentally it's probably okay, because there's the pound and there's the Kiwi. Technically we're okay, but fundamentally you have to check your risk on or off. And if you think that we're going to be risk off for the remainder of the day, this is going to be a good trade. Okay, and so the GN would be a long, but you'd have to check your fundamentals. Okay, you strip out the yen, and that's how you get pound Kiwi. Okay, dollar CAD was the largest mover at 6%. I put something out on Friday about dollar CAD. We hit MR1. And we did fall a lot, so that was a really successful trade. I put out EA, EC and UC, and all three trades went to target on Friday. I was very tired on Friday, but it did actually pan out quite well. And largest stop loss clusters AU. Location is pretty much near the round number. There's a bit of liquidity there, it's quite large. And dynamically, pound is strongest at the time of doing the screenshot, and the Aussie is weakest. So there's the pound strength. So they shorted it quite a bit, so be careful. No signals created on Friday. Weekly count was great. Potentially pound Kiwi long might be good, but I would wait for the London Open. Not long to go now. Trade safely at all times, and risk management is absolutely paramount. So that's it. So I'll wrap up now. I don't want to make it particularly long. Fairly mixed, but then probably understandable, because that China data was pretty rubbish, and you know, we're a little bit hungover from last week, where we were on the precipice of a crash. So the fact that we're not crashing is probably a positive sign. So trade carefully, and I'll be back tomorrow for tomorrow's bulletin. And have a good day, and I'll speak to you soon.